Okay, it's Tuesday the 22nd of September and I think it is worth another video after yesterday's pretty crazy action. Unexpected if I'm honest. Right, this is a chart of the Aussie dollar versus the US dollar. Now there's something of a head and shoulders pattern here, which I'll go into on a shorter term chart. I think it's also relevant. We're just holding the 55-day moving average, which is this black line here, but I wouldn't place too much emphasis on that. I don't think this is a particularly bullish chart. If we look at the weekly chart, you can see we're now back below the 200-day moving average, which I think is more important. Last week's low was 72.52. The moving average is at around 72.50 as well. If I can try and find it, there we go, 72.50. So we're below that, significantly below that now, and I think that's more important. As we look at the shorter term charts, if I can just get that for you, hold on a second. Okay, here's what I think is more important. I think this is a head and shoulders pattern on the Aussie dollar after a good recovery, and it does look like we've now broken the neckline. The Aussie dollar's been quite kind to us. It's just holding below the neckline, giving us plenty of opportunity to get into a short. So 72.30 would be the exact level of the trend line. As you can see, we didn't get much further than that. 72.35. Where would I place a stop? Well, if you really want to be safe, you could place a stop above 72.60. It's only a 30 pip stop or 30-40 pip stop, depending on where you get into. Maybe you get in at 72.20. But I think that's the safest trade. If we get above 72.60, then I'm definitely wrong. And this is going up to at least 72.85, 90, and maybe beyond. So that's my best suggestion for the Aussie dollar. Just before I finish, the first target would be 71.40, 71.30. Little bit of price action around there, as you can see. Lending support to the Fibonacci levels that I've got on there, but I wouldn't be a buyer there. If you're happy with a decent profit, if we happen to sell there, we could be looking at 60, 70, 80 pips profit. Certainly that would be decent enough, but I'd be ready to sell a break below 71 sort of 25, because it does look like this will continue lower eventually. So this sort of 70, 60, 50 area, and the big support level will be down here at 69.80, 69.60. Yeah, that would be a reasonable target for the head and shoulders pattern. Double top on the New Zealand dollar. We predicted it and we got it, and our shorts worked absolutely beautifully, offering more than 100 pips profit on that trade yesterday as we collapsed. What happens next? Well, the double top hasn't even been confirmed yet. It's not confirmed until we break below the 6,600 area. So there is still a way to go. But in the very short term, we have hit the best support level of the day. Now, we've got a 61.8% fib here at 66.60, and we've got a decent trend line going all the way back to mid-2018. So we're talking about a 2-year trend line. This all comes in around 66.60, 66.50. Now, this is more important than the double top. Well, is it? I don't know, because the double top came in around the 200-week moving average as well. So anyway, it is a support. It is a very important support level. And although the double top hasn't played out yet, well, it's not even been confirmed. So there's every possibility that the market will turn from here. Right, I'm going to try and show you the short-term chart. Where is that? Okay, we actually have a 200 period moving average on the 4-hour chart. Not quite as important, but as you can see, we've stopped dead there. We've got a very tiny double bottom, in fact. Whoops. We've got a very tiny double bottom, in fact, with some quite bullish candles at that double bottom. So look, it's probably worth a gamble to pay 66.60, 66.50 with stops below 66.40. It's a, 10-20 pip risk trade. And if it works, we're looking at a nice jump back up to 67.00, 67.10. But I must admit, in the longer term, I think we're probably going down. So just watch that. Watch that level. What can I tell you? Yeah, that's the big level of the day. Obviously, we've got big resistance at sort of 67.70, 67.80, but I don't think we're going to see that again. Euro yen was a beauty. We did really well on that. Again, head and shoulders pattern. We broke. We were gifted a chance to sell at the neckline at 124.20, 124.40. We actually topped right in the middle of that range. That was beautiful. We can take these off. And then we just collapsed like yesterday, obviously, all the way down to 122.49. I think I took profit around 122.70. So that was a nice 150 pip profit, and we didn't get out that far from the low, in fact. Big support level around 122.30, 122.20. We've got 500-day, 100-day moving averages there, and overlapping confluence, if you like, of Fibonacci support there. So that's the big one for today. If we do continue lower, it's got to be worth trying along there. Yeah, no, nothing on the weekly chart in particular. So yeah, it's got to be worth trying along there, really. You can see the 100-week moving average about 122.10. So if you put your stop below 122.00, that should mean we've really given an opportunity for that support level to be tested, and break below 122.10 would therefore be quite an important sell signal. Right, Euro US dollar had a great run up, and it now appears to be forming a head and shoulders pattern. So let's just zoom in on that one. There we go. Right, this looks certainly like there's the left shoulder, there's the head, there's the right shoulder. The fake break above here fooled me as well as lots of other people. Now we broke back down below the hourly moving average cluster here and collapsed to retest recent lows. Now the neckline really in theory is here at 117.50. We dipped as far as 117.30 yesterday. I didn't get us into that trade. I was waiting and we had too much else going on anyway. Thankfully I didn't, because we then bounced up. Now I would have stopped out of this thinking that the neckline had failed, but you can see we're just tinkering around this 117.50 area. So what I would suggest is sell a break below 117.30. We've got all sorts of spoofing going on and fake moves. If we break below 117.30, then I would have thought there will be some follow through, because this really does look like an important topping pattern. Let's just go back to the daily chart. The only thing that concerns me about this pattern is when you look at it relative to the run up, it looks pretty big. It shouldn't really look as big as that, but still, I'm going to go with it. And I'm going to suggest that a break below 117.30 is a sell signal. Now, we have some Fibonacci support around 116.90, 80. I don't think that's enough support to consider a long, but you might want to take a little bit of profit there just to see if it bounces. It might bounce back up to 117, sort of 35, 45. It's possible. Maybe cover half of your short just in case that happens, and then you can sell it again. But certainly a break below sort of 116.75 would be a significant sell signal. There's really nothing to stop us falling, well, even as far as 115 double low. So just watch that carefully. Canadian dollar, well, I was expecting this to go up all of last week, and we just went sideways. And of course, Friday we had a good recovery, and then yesterday we had a good run up. So a bit frustrating having waited all week for this move, and then we finally get it on Monday when most of us weren't even in the long position. I actually was, but I still got out too early. Right, it looks like we can head up towards 133, sort of 75.95. This is a very strong resistance level. We have confluence of Fibonacci, and we have the 500-day moving average. So we also actually have the 100-week moving average at 133.73, which is fairly obvious when you do the maths. Obviously, 100-week and 500-day moving averages tend to be very close together. So watch that level. Probably worth trying a short. There is some resistance. Just you can just see from this sort of consolidation pattern here. Anyway. But a break above sort of what should we say 134.20, that should clear it. Then we're going up to 134.80, probably 135 10.20. Oil we were short, and that just worked really nicely. We were getting short around the end of last week, and of course we absolutely collapsed. Now you can see why we bottomed out here, sort of 23%. 23.6% fib at 38.86, coupled with the 100-day moving average. We got down to 38.66, which was just a fraction below the 100-day moving average. Now we bounced. So the question is, do we now trade in between the 55-day moving average, which is at 41.25? Well, we got 200 at 41.90, call it. So that's the little resistance band. And obviously we've got support down here around sort of 38.90, 38.60. It's entirely possible that we just trade within there now, but obviously if we start breaking below 38.50, that should be the next sell signal. I think that's all I can say on oil. The short-term charts are just a mess and not giving me really any information at all. Those are the levels that I would watch in oil.